Hello and welcome to This Week in Crypto. Today we're breaking down the biggest developments shaping crypto and trading right now. From Wall Street's strategy shifts and tokenization milestones to index rules that could move billions and regulator drawing lines around high-risk products. Here's what happened this week. JPMorgan waited offering crypto trading to institutional clients as big banks reassessed demand. Coinbase pushed deeper into prediction markets with an acquisition part of the broader super app pivot. MSCI considered excluding bitcoin-treasury style firms from major indexes, potentially forcing massive fund selling. DTCC got an SEC no-action green light for a security tokenization service covering stocks, ETFs, and bonds. UniCredit issued its first tokenized structure note, adding momentum to regulated on-chain securities in Europe. ProShares pulled filing for some highly leveraged ETF ideas after SEC scrutiny, signaling tougher review for extreme risk products. Let's dive in. First, Reuters reported that JPMorgan Chase is evaluating whether it should offer cryptocurrency trading to its institutional client base, including the possibility of spot and derivatives trading, though the effort is described as being in early stages and dependent on whether demand is sufficient. What's happening? The assessment was reported as still preliminary, with concrete plans tied to client demand. The report noted Morgan Stanley plans to offer crypto trading on E-Trade in the first half of 2026 through Zero Hash as the broader competitive backdrop. Reuters also contextualized the market size. CoinGecko data in the report put the global crypto market around $3.1 trillion, with Bitcoin about $1.8 trillion of that. Here's why this matters. This is less about single product launch, but more about the market structure. Bank distribution matters. If a top-tier dealer decides to intermediate crypto for institutions, it can pull liquidity and flows into more traditional channels. Derivatives are the real tell. Spot is one thing. Derivatives imply a deeper risk management and market-making commitment. Reuters explicitly flags spot and derivatives as under construction. Institutional adoption is now competitive. Reuters explicitly framed this as a part of a broader trend among major financial firms. Coinbase buys the clearing company and doubles down on prediction markets. Coinbase said it will acquire prediction market startup The Clearing Company, a deal described as Coinbase's 10th acquisition in 2025. Here's what's happening. Reuters described prediction markets as platforms where users trade contract based on outcomes like election or economic indicators, and noted both the appeal and criticism. Reuters also reported Coinbase launched its own prediction market platforms earlier in December 2025 and has expanded into stock trading, positioning itself more directly against traditional brokerages. The deal is expected to close in January. Financial terms were not disclosed. Coinbase shares were up 2.6% in afternoon trading after the news. Reuters also listed earlier 2025 Coinbase deals, including Deribit for $2.9 billion and Echo for about $375 million. Here's why this matters. This is a strategy signal. Coinbase is trying to reduce dependence on pure spot crypto volumes by building a broader trading ecosystem. Engagement moat. More instruments, crypto stocks, prediction contracts can increase time in app and switching costs. Regulatory heat shift, not disappears. Expanding product surface area often means more rule sets, but Coinbase is clearly betting that diversified trading is worth it. MSCI considers kicking Bitcoin-treasury firms out of indexes. One of the most underappreciated market-moving stories this month is that MSCI is considering excluding companies whose digital assets holding exceed 50% of total assets from its global indexes, arguing these firms can look more like investment vehicles than operating businesses. Here's what's happening. Reuters said MSCI's proposal is out for public consultation until January 15, 2026. The reporting highlighted potential impact on digital asset treasury firms such as Strategy and cited analyst estimate of up to $9 billion in potential outflows for Strategy due to reduced passive fund demand. Reuters also cited an estimate of around 200 DATS with a combined market cap near $150 billion potentially affected. Here's why this matters. Index inclusion is not cosmetic, it's mechanical demand. Passive flows are price insensitive. If an index provider changes eligibility rules, some funds must rebalance. It pressures the corporate Bitcoin proxy trade. A major appeal of DAT firms is that they can act as equity market wrappers for Bitcoin exposure. Index exclusion directly attacks that distribution channel. MSCI can set a precedent. Reuters noted other index providers could follow MSCI's lead. DTCC gets SEC no-action green light for tokenizing securities. In one of the clearest plumbing stories of December, Reuters reported that a DTCC subsidiary received an SEC no-action letter to offer a service to tokenized stocks, exchange-traded funds, and bonds, with a rollout planned for next year. Here's what's happening. Reuters reported that under the SEC no-action relief, Depository Trust Company can offer the tokenization service for 3 years and across a number of blockchains, with additional details expected in the coming months. Here's why this matters. If you care about whether tokenization becomes real finance, this is the kind of steps that matters. DTCC sits at the core of US market infrastructure, so a tokenization program here is fundamentally different from a startup pilot. No action relief is a regulatory you can proceed signal, which reduces one major blocker to experimentation at scale. UniCredit issues its first tokenized structured note. UniCredit issued its first tokenized structured note aimed at professional wealth management clients, following a tokenized mini bond it did recently with Italy's state lender. Here's what's happening. Reuters described tokenization here as converting instruments into digital assets recorded on a blockchain with full legal validity and linked it to reduce insurance friction. The note used technology from BlockInvest and was recorded on a public blockchain by Wiltex, which Reuters said is authorized by Italy's markets regulator Consob. Here's why it matters. This is what institutional tokenization actually looks like in practice. Not meme coins, not hype cycles, a regulated bank issuing a structured product in tokenized form using an infrastructure stack that includes a regulator-authorized platform. It adds to the evidence that tokenization is moving from concept to repeatable insurance workflows in traditional finance. SEC scrutiny forces ProShares to pull some highly leveraged ETF plans. Not strictly crypto only, but very relevant for the risk product pipeline around crypto and high volatility names. ProShare withdrew registration requests for several highly leveraged ETF proposals after the SEC issued warning letters and paused review of similar plans. Here's what's happening. Reuters said the SEC sent letters to 9 ETF providers, including ProShares, flagging the risk tied to funds seeking up to 5 times exposure. ProShares acknowledged the SEC view that these novel leveraged products may not fit existing legal standards. Reuters noted that proposals spanned tech stock leverage, sectors, companies, and cryptocurrencies. Here's why this matters. This is the signal about the next phase of product regulation. Even in a market hungry for more torque, the SEC is clearly putting friction in front of extreme leveraged packaging. If you trade crypto-linked equities or crypto ETPs, this kind of stance affects what products get approved, marketed, and broadly distributed. This week's coverage made one thing clear. Crypto's next big moves are coming from market structure and institutions, not just token prices. Wall Street is still deciding how directly it wants to intermediate crypto trading, and JPMorgan weighting institutional crypto trading is a major tell. Exchanges like Coinbase are racing to become multi-asset trading hubs, with prediction markets now part of the playbook. Index rules may become a hidden driver of volatility for bitcoin-treasury stocks if MSCI's tightens classification standards. Tokenization is getting closer to the core of real-world securities infrastructure, from DTCC's no-action relief to UniCredit's tokenized issuance. And regulators are still drawing boundaries around high-risk packaging, which matters for the next generation of crypto-linked ETFs. Stay tuned for more insights and updates from the world of crypto. Make sure to like, comment, and subscribe.